Hello traders, Jason here with SwingHigh.com. It is Tuesday, January 19th, 2009, and this is your post-market analysis. It's good to be back after a long 3-day weekend, especially with a nice rally in the markets today. As you can see here on my list, all the markets were up about between 1 and 2%. The Dow up about 1%, the financials up a little over 1%. The S&P 1.2, the Nasdaq 1.4, and the Russell's 1.7. So a nice broad market rally today. So that's good to see. Let's take a look here at the intraday chart of the SPY, which is the S&P 500 tracking ETF. Here's the 15-minute chart. As you can see, this morning we just shot straight up, barely stopping at this resistance here. We did hesitate at the 114.6 mark on SPY, put in a nice bull pullback or a symmetrical triangle formation, a very small one, and then broke out and through that resistance, which is nice to see. Put in a high base type formation here, or maybe even an ascending triangle, and then broke out to the highs of the day and finished the day on strength. Now after hours here, we're showing a little bit of weakness, but we'll have to see how that resolves. That's probably some earnings movements going on there. One thing I'm worried about at this level here is that this is the third time we've tested the 115 mark on SPY or the 1150 mark on the S&P 500. And all three times we pulled back, and or the two times before we pulled back, and both of those times we pulled back to the same 113.2 area on SPY, which gives us a nice high base on the daily chart. As you can see here, we are chopping around in this range up here going sideways, which after a leg up is a high base formation. Also to note, I was talking about this lower trend line last week and how we couldn't get off of it, and on Friday we broke down below it, which wasn't a good thing to see, as this whole thing is in the context of a rising wedge formation. Rising wedges are normally bearish. They normally break down to the downside, and that's what we were seeing on Friday, which was a little scary. But with today's action, we broke back above that trend line, which is good to see, and I would really like us to come up here and test the upper resistance line of this rising wedge formation. Ideally, we should break above it. That would be very bullish, and from there we could easily, a breakout of this high base formation, and we can easily test the 120 area on SPY. That would be a nice run there, and with that we would be testing the upper resistance line of this rising wedge formation, which would also be quite bullish. So I would like to see that. Will we see it? I don't know. The markets can do whatever they want, but if that does happen with a breakout of this high base, I would expect to see the next major resistance area coming up around 120. Let's take a look at the market internals. The trend, sorry about that. The trend was obviously bullish today, well under 1 and under 0.8. Was actually in a very healthy range here between 0.8 and 0.5, which is something I like to see. The trend Q paints a similar picture, almost exactly the same thing going on there. The tick was obviously bullish, above 0 for almost the entire session. The tick Q, same thing. And the VIX only dropped about 2% today, which normally I would say that I like to see a 3 times inverse move in the VIX as confirmation. So I normally would have liked to see the VIX drop about 3% or more today, but we are under 20 on the VIX, which is definitely bullish, and can't ask for much more than that at this point in time. That's a nice drop in the VIX for a longer term trend at least. So things look good. Let's see how tomorrow holds up. Keep your eye out for the producer price index and the housing starts data. Those can definitely move the market. So thanks for being a part of SwingHigh.com. I'll talk to you tomorrow.